If you run your own limited company, one of the first real questions you may have is, how do I pay myself? There's no monthly salary day from an employer. You are the employer. Today, I'm walking you through my system for paying myself as a company director. So we're going to go through salary, dividends, pensions, benefits, and taxes. Fun. But I think I'm going to do it in a way that is really clear and easy to understand. And hopefully by the end of this video, you'll have a good understanding of a system that you can use to pay yourself as a limited company director. Hi, if we haven't met before, my name is Dahlia and welcome to my channel, Get On Top with Dahlia, where I am delivering personal finance, business and investing tips every single week to help you get on top financially. Let's go. Boring stuff. Before we get into this video, please note that this video is for general information purposes only. It does not constitute professional tax or accounting advice. Always consult a qualified accountant or tax advisor for your specific circumstances. First thing you're going to want to do is separate your business bank account into at least two different bank accounts. So you're going to want to have two separate accounts. This is mostly relevant for people who have a limited company where you manage all the finances yourself. I recently was having a chat with a colleague in my industry who also ran a limited company, and I was really surprised that she didn't do this and didn't know about this. And she actually told me afterwards that this advice was really helpful and she had a really clear idea of how much money she actually had for herself after this. So in my business, I have two separate bank accounts. One is for all the money I receive from clients, and the other one is for taxes and reserve. So once a month, I will take a look at my client payment account, and from that, I will move over into the other tax account all of the VAT that's been paid, as well as 25% of the profits that I've made that month. That way, I know exactly how much I have left over for other business expenses and for paying myself. And you're also not going to be caught out with a surprise tax bill at the end of the year. That is never any fun. This is a really simple step that you can take to make sure that you always have a clear picture of your company finances. Next thing I want to get into is salary versus dividend and the combination that works best for me. Now, again, check with your accountant exactly what the figures are currently and what they think will work best for you. So there are two main ways that you can pay yourself from your limited company. One is through salary and the other is through dividends. There's a reason that limited company directors use a combination of these, and that's because of tax efficiency. So your salary is treated like an employee payment. You're the employee, you're on the payroll, and you pay income tax and national insurance. Whereas a dividend is paid to the shareholders, i.e. you, assuming that you're the only shareholder that is, out of the company profits after corporation tax. So you do not pay national insurance on dividends, but you will pay tax on the money that has come into the company before you can issue yourself a dividend. Now, in order to issue yourself a dividend, your company must have available profits. So here is a system that I use. First of all, I pay myself a tax-efficient salary. Then I take the rest of the money that I want to take as dividends when there are profits in the company. So let's have a look at these numbers. Please note that these numbers are correct at the time of me making this video, and they may have changed by the time you watch this, so please do check with your accountant. For the UK tax year, the tax-free personal allowance is £12,570. Divide that by 12 months is £1,047.50p a month. So what I've done is set up a direct debit so that that amount gets automatically transferred to my personal bank account on the first of every month. It is good to use up your personal allowance first so that you don't pay income tax on the salary. After your salary, the next step is dividends. And here are some key points that you need to understand. In the UK, the amount of dividend that you can take tax-free is only £500. So what a lot of limited company directors do is pay themselves dividends based on the next tax band up, which is the basic rate tax of 8.75%, which is payable on dividends of up to £37,700 before you move into the next higher rate dividend tax. Very important to remember is you can only pay dividends if the company has distributable profits, which is after you've accounted for expenses, salary, and taxes. If you start randomly taking money out of your business bank account when you have no profit, this is going to be considered a director's loan and you will need to pay it back. So speak to your accountant if you're confused about what that means. So what I do when my company has profits and cash available is I declare a dividend and then I move that money into my personal investment and spending accounts. Why do we pay ourselves in dividends? Because dividends don't carry national insurance contributions, it is more tax efficient than taking everything out as a salary. So let's get into the numbers. Assuming you have enough company profits to max out the dividend payments to yourself, you can then transfer yourself £3,140 a month to your personal bank account, which is £37,700 a year divided by 12. And make sure that once you've paid yourself that, to set aside 8.75% of this for tax, which is £274.75 per month, into a separate account for your personal tax. So let's get on to pensions next. As a limited company director, you don't have the advantage of having an employer make your workplace pension contributions, and paying yourself a pension might not have been something that you've thought about. So let's get into it. Because you are your employer and you deserve to have a pension too, there are some tax efficient ways that you can set this up for yourself. A product that I use is called a SIP, which is a self-invested personal pension. And my limited company is set up to make contributions on my behalf. This is something that I set up myself, which I'll tell you how to do next. The reasons that it is a great idea to set this up for yourself is because limited company contributions to your pension is a business expense, and this is going to reduce corporation tax overall, meaning that you are going to have a lower tax bill at the end of the year while having paid future you more money. And what is not to like about having more money? The annual allowance for a limited company in the UK to pay into a SIP is £60,000. Now, to be able to contribute this much, you of course need to make enough profits in the company to justify contributing this. However, a huge benefit is that it is a tax deductible expense. The next benefit of doing this is that this contribution doesn't count as employee income. So you're also going to save on income tax and national insurance contributions and grow your retirement pot for later. So in my personal routine, I've decided on a fixed monthly amount that my company pays into my pension by direct debit every single month. And this gives me both a personal finance benefit, which is retirement savings, as well as a business benefit, which is the tax deduction. When I started doing this, I did a lot of research and I settled on a company called Interactive Investor. The reason that I did it is because it's tended to have one of the lower fees and it also had a really wide range of funds. So there are a lot of different companies that offer SIPs. However, a lot of them, such as Vanguard, for example, will only allow you to invest into their funds, whereas I liked Interactive Investor because it allows me to choose from a huge range of different funds. Another reason that I liked it is because I can also automate the percentage allocation of my contributions into whatever funds that I like. So if you want to set this up for yourself, you go onto their website, you can set up the direct debit from your limited company to your SIP with them, and then you can choose from their huge range all of the funds or stocks that you want to invest by percentages every single month. And then what it's going to do is as soon as the money comes into that account, it is going to send them off and invest them for you automatically. This is amazing because it's just so much easier when you don't have to manually think about doing things like this every single month. Lastly, I want to get onto other company benefits and expenses. Now, there is a long list of other ways that you can make your company profits benefit you in the most tax efficient way. And of course, some of these might not be relevant to your type of business, but here are a list of some of my favorite benefits. However, please do always check the amounts and what you can claim with your accountant. So something that I always do is claim a working from home allowance and home office expenses. If you use part of your residence for business, you can claim a percentage. So for example, I use 2 entire rooms in my house for storing business equipment and as an office. So I'm able to claim a particular percentage of my total rent back through my company. Next benefit is a mobile phone paid directly for the company. If you make a contract in your company's name, one phone can be for work and you can have a separate phone for your personal use, and this might end up being more tax efficient for you. The third thing is leasing a car. If you need a vehicle for your business that is wholly and exclusively for business use, you can lease a car. So something that a colleague of mine does who has to drive to lots of events and carry lots of business equipment with her to those events is lease a Tesla for £500 a month. So she has the use of that car full time. There are no petrol expenses because it's an electric car, and she can write off the full amount of that against her business. The next two are a couple of lesser known ones. Firstly is you are allowed to have an annual event or staff party for your company. For small companies, certain social functions have tax-free allowances of around £150 per person if you meet specific criteria. So having that company Christmas party or awards night may be able to be claimed back against tax. Other perks that you can claim back are business travel and mileage. Travel that's wholly and exclusively for your business is allowable, and it can reduce your taxable profits of your limited company. Lastly, something that a lot of people I don't think know about is something called trivial benefits. So your company can pay you up to £300 per tax year divided into £50 amounts of something called trivial benefits. And these do not have to be for business purposes. This can be anything you like. So an example is you could buy yourself 6 £50 vouchers at a store of your choice. The limit is that every benefit needs to be under £50, but that is another £300 tax-free that you can effectively pay yourself. So you could buy yourself those vouchers from somewhere that you're going to spend the money anyway. So that's how I pay myself as a director of my limited company. A monthly salary, dividends from the profits, pension contributions, a tax pot to separate out my taxes from the rest of my business money, and all of the benefits that I've listed. If you're running a limited company and want to pay yourself smartly, this method can help you keep things simple, tax efficient, and organized. Right, we have come to the end of this video. I hope this was helpful. I thought it would be helpful for someone who does what you do, that is run your own limited company from home, to tell you how they pay themselves. I have been doing this for 15 years. I am not an accountant. However, I find that when accountants or the typical person online who is an accountant explains this, I find it really boring. So I've tried to deliver it in a way that I think was as relatable and interesting as possible. If you like this video and you found it helpful, please hit like and subscribe to my channel. I'm dropping new videos every week on personal finance, business, and investing. And I'd love it if you drop me a comment about what is your biggest question or issue with paying yourself as a director of a limited company. And I will have a look through those and maybe cover that in a future video. Thanks for watching. Ciao for now.